Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 12th, I don't know what you want to call, what you want to nickname today out there. We'll just be called Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Look, markets are in such turmoil out here. Let's just kind of get to the chase. I would love to be able to take your call if you want me to look at something specific or conversation, what have you. And you can give me a call at 877-927-6648. If you can't call in, we've got you covered there too. You can always send me an email, steve@tfnn.com. In that subject heading, please put radio show question if you can. And then our Tiger's Den, like Peter here, would like to take an overview of really everything. So right now, all the markets are red. Now, when I say all the markets, if you look at my left-hand panel, well, I have to turn it on, Steve-O. If you take a look at the left-hand panel, where you get all the indices, then you've got gold, silver, light sweet crude, natural gas, the 30-year, the 10-year out there. Everything is red, sort of an indication of a liquidation event, right? Everybody's just throwing everything out. But let's go take a look at the markets. It's been a wild ride just over the last, several hours out here. So let's try to get a feel for what it's doing short term, at least. Let's take a look at the short term piece of it. And just before we came on the air, the Fed, and I apologize, I didn't really get the announcement out there, but something like putting about 2 tranches of half a billion, so $1 trillion in essence over the course of the next 2 days. But buying, who knows what they're buying out there? I don't know what they're buying. But that news went ahead and spiked up the markets. We'll see if it holds out there. You're looking right now at just a 5-minute chart, and you're at least getting a little bit of. So when we came off the bottom this morning, I would say there really wasn't much conviction in the move higher. You know, we had the one little snapback at 9:55, but if you took a look at what was going on volume-wise, there wasn't really much here. At least just on a 5-minute, you're seeing a little bit of conviction behind us. But what does this mean? Let's get away from the 5-minute chart, and we're going to go from the intraday. We're going to surf around here because part of my role, or one of the roles I'd like to be able to provide for you today, is take a look at where's support, where's longer-term support. Maybe try to help to wrap your head around these markets to the best that we can. So as an example, I'm just going to bring over the this set of charts here. This is the NASDAQ futures contract. Now, let's start with the short-term time frames. In the short-term time frame, I'm going to start with the 30-minute time frame. So here on a 30-minute time frame, what we know is that as price was pushing lower this morning, it was forming a Rhodes momentum indicator bottom. It did it with that hammer candle that formed during that bar that we just took a look at. And then what price did during the morning was it struggled to get through resistance. So we now got, when you get a bottoming signal, the question is it a viable bottom? Is it a bottom where there's more rally to come? Because that's really the question that everybody would like to know right now, right? So all that you and I can do is, for the specific time frame where we see the patterns, is to be able to identify resistance. So resistance is going to be either the TAS market profiles to the extent that they're available, or where price had most recently broken down. And by breaking down, we're using our Tommy DeMark TD9 count tool out here because it provides us with great support and resistance. We're seeing it in action as we speak right now. So no surprise this morning that the rally stalled where it did. And in one way you could say, hey, the rally stalled where it did after we went to limit down. But because limit down isn't necessarily something you see every day, let's not focus on that. Instead, let's take a look at the TAS market profile for the 30-minute time frame. It was bearish in structure out here. So bearish in structure because the center of that box is at 75.84, the top at 76.16, and the bottom down at the 74.25 level. So price right now, this bar that we're in doesn't close until 1:30. So I don't know if price is going to close above the bearish structured market profile, 76.16. We know there's sellers out there. We also know there's sellers at 77.33.75. Now, this is a 30-minute time frame. It's a 30-minute time frame chart that we're taking a look at. But if price is able to close above 77.33.75, it doesn't have to do it during this 1 to 1:30 session out here, but it does need to close above that if there's going to be any more legs to this bounce or whatever. I don't even really know how to term it. At this stage here, you would think, we haven't seen any kind of a short covering rally. Why should we? Why should we see any kind of a short covering rally right now when all price is done in the short-term time frames has punched its way up to resistance levels? Again, inside the NQ, it's about 76.14 and 77.33. Those are the areas that you would be watching. On an hourly time frame here, what has price done? Well, we get to wave number 7 on an hourly basis out here. Price above Stevie's red line, that's 75.32. But resistance, the resistance on an hourly basis, well, let me repopulate this here and make sure I got it. Yeah, resistance is 77.18. That's its first level of resistance. So if price can close above that, that would say, okay, a rally would extend. We don't have that signal right now. All we have is the Fed announcing something, an initial, maybe it was the algos that were kicking things up, but you and I are looking at resistance levels, nothing I've drawn in, and we're seeing how price handles those areas. And that's what you're going to want to be watching over the rest of the day out here. And those numbers I just gave you aren't going to change, those Tom DeMark breakdown levels. Now we switch over to a 2-hour time frame chart. Wave number 7, Rhodes momentum indicator. And here you can see on the 2-hour time frame, price is struggling to get above Stevie's red line. It's priced around 76.06. That's a key level. If price can get above that, then resistance levels to write down 79.11, 80.36, 81.60, and 82.22. Those would be the areas. We're going to take a look at support. To look at support, we've got to go to the larger time frame charts out here. You know, these lows that are in, when we take a look at the different candles that were formed, all these different time frames, 30, 60, 120, 240 is what we're on right now. You got the hammer candle, Rhodes momentum indicator signal, but price must close above Stevie's red line, which is about 77.30 out there. And yeah, Peter, I'll switch it over to the ES so you can take a look at that too. And on the 5-hour time frame, no kind of signal yet. You would have a key reversal bar if it would close higher by 2 p.m. above the close. So that's about 76.01. Somewhere around there, but price here still would need to be able to close above 77.69. That's Stevie's red line out there. So, 500 billion for the rest of monthly calendar as well as today and tomorrow. So you're saying it, and then okay, I won't try to multitask here. Okay, so that's what's going on in the short term. On the longer term, let's go on longer term. Let's take a look at monthly for longer term out here. So what do we know? So if the market continues to crater, and I have every reason to believe that it will, but we'll take this one step at a time. The real level of support for the NQ, 63.64.75. 63.64.75. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at the ES Mini right now. The Dow's off 1459, S&P down 163. So, Peter, with regard to the ES Mini, we can see the bottoming signal here. But again, price is going to have to overtake resistance. We've seen it fail, and there's two key levels here to be watching because they've now both been tested intra-session on this bar, this 30-minute time frame chart. So this is the bar that's going to end at 130. And so the key levels to be watching, Peter, 26, and everybody else out there, I suppose, from an intraday standpoint, 26.15 and a quarter. And 26.47.25. If price can clear that, I am not saying that it's going to clear that, but if price can clear that, then the next target to the upside would be 27.50. That's from the 30-minute time frame chart. From the hourly chart out here for the ES Mini, Rhodes momentum indicator, bottom signal, price is trading above Stevie's red line, and 26.44 is clear resistance, the TD9 breakdown level. So 26.44 there. If it can clear through that level, that says a possibility of 28.14 on a further rally to the upside. For the 2-hour time frame chart, price is going to need to get above Stevie's red line. That's at 25.96. That's its current resistance. Then you've got your market profiles. 2685, 2743, 2762. That's a bearish structured box. And if price can get above that, 2809. I am not insinuating that price is going to get above that. First things first, it needs to clear resistance. And right now on the 2-hour time frame, that's at the 2597-ish area. In the 4-hour time frame, it's at about 2644 before it would say, okay, you may be out of the woods a little bit. And on the 5-hour time frame, what do we have out here? Not much. It would be the same as this would be the 2 p.m. bar. It would have to close one tick above where it started trading. So that's like at about 26.01 in order to be a key reversal bar out there. On the daily time frame, price is pushing lower, doing less relative energy. Okay. On the weekly time frame, price is sitting right on support. Right on support, 25.75.50. We're trading at 25.77 and a quarter out here. So below that says that we had lower to where, if I put in the continuous contract here, let me just do that. And that way this will populate the weekly and the monthly out here. So give it a second to do that. There we go. Oh, wait a minute. Okay, I take that back. So the next weekly level of support, potential support, breakout support, is 25.67.25, 25.67.25 out there. And if it breaks below that, what's our monthly come up with here from the continuous contract? 22.39.50. That's what we're looking at. So Peter and everybody else who are looking for some short-term information out there, I hope that helps with regard to that. Let's go to a question that has come in here from Michael Hoyle. Sorry, Mike, I don't mean to give out the names. I don't do that. But Mike wants to take a look at Ford out here. So let's get that going. Do you show a TD 9-count bottom on the weekly chart today? Let's go take a look and see what we do see out here for Ford Motor Company, see what pattern it is making out here and what bar it's in. So, yes, this is bar number 9 from a weekly standpoint out there. Absolutely. So the question is, will bar number 9 hold? What's going on in a daily time frame here for Ford? Because if it was going to hold and you're looking to get in, you wanted to see some kind of bullish action on the daily time frame, and we don't have that. We've got price moving lower, doing less relative energy, but nothing bullish here. And really, Ford would have to close above Stevie's red line at this stage. That's 622. That's going to be your real resistance area. Now, that price is going to change, Michael, as price moves up or moves down or what have you, but that would be the area that price would need to move above. You're below the daily profile, so there's no support there. On a monthly basis, what is Ford Motor Corporation doing? Pushing lower, doing less relative energy out here, but its next level of support is actually $2.40, trading at $5.48 on the monthly time frame. But to answer your question, Michael, absolutely yes. This week will be bar number 9. And remember, if this is going to identify a bottom, it would either be this week or next week's low, because it can be the low on the bar following bar number 9. So I hope that helps you out. Let me see if there's any other questions. Yep, there's some starting to come in. So we've got one from David, and David says, my last email to you pointed out the big ABCD down on many indices. Those have now all been hit and completed, at least the one-to-ones. Let's hope for a bottom of some type. Okay, so this is Dave in Long Island. So let's take what Dave said here, and let's go take a look at the A to B equals CD pattern, because you're absolutely right. You did ask me about that. We didn't think it would be able to get through from a volume standpoint, but you were right. I was absolutely wrong out there. If we take a look, and let's just start here with the S&P 500. I hate being wrong, but that's okay. Well, it's not how you fall; it's how you get back up. So, David, what the S&P 500 has done, a little bit more than the one-to-one A to B equals CD. For me on the A to B equals CD pattern, it's really all about the D point. How is the market making it? How is the market making a D point? And right now, the information that you and I have at 1:24 in the afternoon is that it made it with a gap to the downside, obviously, or maybe not obviously, which is the same as a wide-ranging bar. That's a falling window. That's a bearish reversal candle out there. And so it may be, and price is moving lower, doing less relative energy, but until the so-called by the D point, for me, the A to B equals CD pattern doesn't complete until we see the cavalry, until we see buyers arrive. And the way that I know that buyers arrive, the message they've given, is some type of bullish reversal candle. So it's not out of the question at this stage. So is the one-to-one A to B equals CD done? Steve-O would say, no, we don't have proof of that, not the way that you do these patterns out here. Remember, what I've done is I've I like to believe what I've done is I've taken the great works of others and added some secret sauce to it, maybe something that others had overlooked because of just technology, the tools that are available to us, and so forth. And this is where the real power of the bullish and bearish reversal candles are, in my opinion. So if this is not the bottom, and I don't have any, in fact, we have everything to indicate right now, which 125 that it's not. Then the 1 to 1.272 area is open, and that would be 24.52. And the 1.618 is open. That is 22.66 out there. So that was the S&P 500. So let's go take a look at the Dow. Let's just kind of do the same thing. Take a look at these A to B equals CD. Because, the question is, hey, are we anywhere near any kind of support level? In the Dow, if we take a look at its trend channels out here, those are the diagonal lines. And this is coming off of the March 2009 low, and then the lows out here in 2016. And price is nearly back to that area. It's not back there just yet. That area would be about 20, just call it 21,000 even Steven or thereabouts. You can see price. So that would make, now price has attacked a level of support, potential support, and that is this red horizontal line out here. That's the monthly horizontal trading range for the Dow. We're looking at a weekly chart out there. If price breaks below this, let's call it 25.62, oh lordy, because that's below the trend. That's below the trend line going back to 2009. But in the Dow, with regard to its A to B equals CD, before we go off for a hard break, this has completed the same thing. This is about the 1 to 1.272. David, great call and great observation. And I'm sorry that I was wrong and you were right, only because of the damage that it's done out here. But is this a completed A to B equals CD pattern? I would say not until we see a bullish reversal candle. Steve Rhodes with TFNN. Be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Dow's off 1433, S&P down 161. Hector writes in, and Hector wants to know if the Qs are back in play to the upside. So today is March 11th. I've got his March 12th out there. So maybe it was the leap year that got you off by a day. Is it in play? The answer is I don't know. The answer, is it in play, really is going to be answered by whether or not price can take over resistance. So you might not have caught the opening, but you wrote in, and I'm going to write this out here or go over this once again. Because if it's in play, what you need to see is you've got to see some short-term resistance levels fail. So inside the NQ right now, it's going to be 76.23.25. You've got to see a close above that. Now, that close above that is a 30-minute chart, means 2 p.m. We just started the bar that is currently in. If it can close above that, then what price would do or should do is try to tackle the next level of resistance. That's 77.33. We're just sticking with the short-term time frame chart, this 30-minute time frame chart. And then above that, then it's got more clarity to it, but you really also want to understand where are these sellers on some of the larger time frames, because every rally has been sold out here. So if every rally is being sold, we need to know where resistance is. Right now, we know it's 76.23, and we just keep watching. Buyers try to push it up through there, and sellers are happy to simply sell into that, give them everything that they want at this stage. So as of 1:32 in the afternoon, no, I cannot say that this is out of the woods by any stretch of the imagination. The 60-minute time frame chart is going to show us the same type of a thing out here. Hector, 77.18 is the level that it needs to clear. Now, I'm not saying that it can't. I'm just saying that's the only way that you and I would really be able to answer that question out here, 76.13 or so. On the 2-hour time frame is the level that price needs to clear, 77.34 on the 4-hour. And on the 5-hour, 77.70. Those are all the levels that you've got to be watching and observing on any kind of rally. The downside we sort of covered, but we didn't do it necessarily for the NQ. We were taking a look at the cash indices and really doing that just since most people have access to that. We took a look at the Dow and we took a look at the S&P 500. If we look at the NDX, as well out here, you're asking about the Qs. This has made the 1-to-1 A to B equals CD to the downside. But again, it's a gap to the downside. Now, today's candle will be really important out here. But the A to B equals CD to the downside, probably not over unless we see some type of bullish reversal signal. And that brings into play 69.61. Now, if the cavalry comes in, we get some type of bullish reversal candle, then that gives us some other type of message out there and perhaps a counter trend rally. Up into the 84.14 level out there. So, Hector, I hope that helps you out. Thanks so much for writing in, and much appreciated. Let me see if we've got anything else out here. We don't have anything else. Let's go take a look at some of the other usual suspects. And by the way, this chart up here that you're looking at, this is the NASDAQ. This is just a 5-minute time frame chart. You can take a look at the volume, the pullback out here. If we take a look at just simply retracements from low to high, the low was a retest of the low from this morning. That took place at 12:10. And I just get on a 5-minute time frame. And now the pullback is at about the 50% area. Michael had asked, why don't I use the 50% level? In fact, I'll just put it on here for him with regard to retracements. And it's just because of the Fibonacci summation sequence that is out there. And 50% isn't really a part of that level. I know people use it. I'm not saying it's wrong to use it. I just don't use it. I just don't need additional clutter. But you can see here's the 50% level at about 75.69 out there. Your 0.618 retracement is 75.11. You know, Hector, another thing, we know that all of the rallies are being sold. What we haven't seen out here are any of the dips to be bought. So here's one, a very short-term basis, but based upon the news that was floated out there, does that entice anybody to step in to buy equities? And so, you know, you'll be able to. The chart will answer that for you, because I don't know what the answer is right now. The level to be watching, next level to be watching here would be 75.11 on the NQ. It's trading at 75.54 out here. Okay, so let's go to some of the other suspects. Let's take a look at what's gold doing out here, and that's a great question. Give me a second to get to my other set of charts out here, the other tools. I leave 50% out too, Steve. Great, Dennis. Yeah, it's just not. It's just not wrong to keep it in there. It's just when you do the actual Fibonacci math, and I don't have the spreadsheet. You take 1 + 1 is 2, then 2 + 1 is 3, then 3 + 2 is 5, and 5 + 3 is 8, and 8 + 5 is 13, and you start doing the mathematics on it, and you don't get a 50% level anywhere. Now, in the case of Goldilocks, let's take a look at what gold has done so far. Right now, trading down $49, 1592 is the number. And what gold did earlier today was it pushed all the way down to support, and support was 1564. It was between the 1564 and 1578 level. So gold has bounced off of that. It moved right down to support. When you like the equity markets to do the same thing, just move down to support and bounce off of that, well, you know, they didn't do that. So that's what's going on with regard to gold. If we take a look at silver out here, so gold just trading between support and resistance, but support is held, and it was the TD9 count level that identified that support area. Inside the silver contract out here, price got close to support, its next support level. That would have been 1544 out here. So that's its breakdown level from back in July of last year out here. So it looks like there's several A to B equals CD patterns you could do for silver. One of them would start from a TD9 count topping pattern down to a Rhodes momentum indicator signal, a retracement back up into another TD9. So silver completed a 1-to-1, a larger 1-to-1 A to B equals CD, but it too would need some type of bullish reversal candle. That is not today's candle to confirm that 1-to-1 A to B equals CD. So that's what silver is doing. If we go take a look at Sorry about that. We go take a look at natural gas. There's always a question about natural gas. What is it doing? Natural gas pulled back and tested support today. So in the case of natural gas, Rhodes momentum indicator bottom moves up and was able to close above a bearish structured daily profile, but it gave it up the very next day, and now price pulls back and it has tested Stevie's red line. So this still has promise, and it's possible that it's forming an A to B equals CD to the upside. So its bottoming pattern is still in place. Nothing has been negated there, with price just pulling back and testing support. We take a look at light sweet crude. That's trading down $1.91, trading out at 31.04 as we speak. What has it done? This completed a 1-to-1 A to B equals CD, and it did it with the bullish engulfing candle. So I think it was Dennis who was writing about the A to B equals CD pattern. For me, this is how the A to B equals CD patterns work. You see, here's the 1-to-1 level, which price never got to because it just blew through it when we reopened on Sunday evening. And but 38.28 was the first level. The second level was 33.82. That was no area to buy. The next level was the 1.618, 28.15. But that was really no indication to buy there, not until the cavalry arrived. So it's still got a bottoming signal here, suggesting that maybe this gap is going to get filled. That's a maybe. Steve Rhodes with TFNN. Dow's off 1789, S&P 195. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow off 1806, S&P down a couple of hundred out here. And, wow, 4,000 flights, cuts half its employees, Norwegian Air. I don't know who Norwegian Air is, but that's pretty big. So at this stage here, we can see that the Fed's announcement has done very little to provide confidence into this market. Of course, they're dealing with more of probably a liquidity aspect in the bonds that they're going to be buying. They should just say that they're going to start buying the S&P, right? So what's the market? What are the markets doing? What are the markets doing, right? That's the question. So I assume many of you saw the president's address last night. So to the extent that you did, the question I would pose to you, what were your first thoughts as you were listening, or when he was finished with his speech? You know, what were your thoughts? What were your thoughts? My thoughts were, when I listened to it, and you and I covered, we touched upon this yesterday. Let me get these charts up here. We touched upon this yesterday, and that is, to me, I listened to that message and I thought it was a declaration of war. That's what I heard when I listened to President Trump last night, that it was a declaration of war and that World War III, in essence, has started. So think about it. How is that outrageous? I mean, we're fighting an invisible army at this stage out here, a virus, invisible, and And in war, when a war begins, any war skirmishes or what have you, you've also got all that uncertainty. And during time periods of war, so whether it's the First World War, whether it was just a short period of time, the Cuban Missile Crisis, whether it's Pearl Harbor, Operation Iraqi Freedom, the Korean War, we kind of touched on some of those things yesterday. So here's World War II. Identify for you where price was trading. This is the Dow back in December 1941 out here. And now the market bottomed before the Battle of the Coral Sea. But the importance of the Battle of the Coral Sea was that it was, I would consider it the first real optimistic event that took place from a market perspective. And so when I took a look at last night's, or when I listened to it and replayed last night's presidential address out there, boy, I didn't see any signs of any kind of assurance, any kind of optimism, any type of optimistic event or anything out there. And so I'm not saying you have to buy into this. I'm trying to look and understand, what are the markets doing? Do we have any historical references that you and I go back to so that we can better understand what's really taking place inside of the market? So that's where my premise began. And then what I did was, and I told you I was going to do it for subscribers, but with the markets being so wacky, and we all here at TFNN, we're all on the same team, right? We're each other's wingmen, wingwomen out there, to try to assist us. So I went back and built my historical files. I mentioned I was going to do this. And on this is the historical daily file for the Dow. And I've got you back to Pearl Harbor, so you can see exactly where the Dow was at on December 7th. And I've also identified for you the Battle of the Coral Sea, so you can see it. Now you're looking at bars, but what you're also looking at, which is really important, what you're also looking at here are all the tools that I use to help us identify tops and bottoms. TD9 count, Rhodes momentum indicator, the Chapman wave signals out there. So those are what we're looking at. So the interesting thing here is if we just start from Pearl Harbor, we can see the price was moving lower. Moved lower for a couple of days, was stretched, and then you got a little rally, you got a bullish engulfing candle to confirm that pattern. But what price never did was it never really got above resistance, which was Stevie's red line. It was close, but really no cigar out here December 17th, December 16th, December 17th, and then price continued moving lower. And then we got the next Rhodes momentum indicator pattern when that bullish engulfing candle formed. And this did identify a bottom. This was a Santa Claus rally bottom, because this was back right around Christmas. And price went ahead and did rally, and it rallied in a top with a TD setup 9 count. That was the extent of the counter trend rally there. Now, when the Dow made its bottom, it made its bottom before that positive event, the Battle of the Coral Sea. But when it did make that bottom, lo and behold, we've got the Rhodes momentum indicator signal, price closing above Stevie's red line out there. And that's what's really important, understanding the oscillator on change line. So these patterns, the cool thing here is that at least I know, and now you know too, that the patterns that you and I look at to identify tops and bottoms, even if they don't always work, this is likely what we will see when the market does bottom. Now, granted, those patterns are still in play right now, but what's missing from the picture here, when you and I look at history of this chart, we see the Battle of the Coral Sea. So far, the way that the market has responded to the Fed's injection into the bond market out here, that hasn't been the positive event. And probably the only positive event out here is that it looks like the coast is clear, or things are starting to dissipate, or maybe game now everybody's closed, right? The NBA, the NHL, March Madness, spring training, you name it, right? So no positive stuff coming out of this. And so what does that say? That says I don't really think that maybe we get some type of counter trend rally out here, but I think until we get that real positive event, we haven't seen the bottom. I think that's the emotion. That's what's going on. These are the patterns. Now, I also went ahead and did it, and I went back and took a look at. I did several things. Let me try to get into the 50s, into the Korean War out here, or it's 1943. Give me a second here to kind of fast forward. See if I can find it real quickly. Sorry, is a lot of this data here is going back to 1896, so it moves a little slow because I put all of my tools and patterns on here. But it was done just simply so that I could do all this analysis. So what was it? 1952 Korean War, 1950, right? I must have. Yeah. Well, so here's the Korean War. You know what it was I didn't. I don't have it on this chart here. I did. Operation Iraqi Freedom. So that was when was that? 2003. Okay, so give me a, wait, I don't think I even did that one. I did the Persian Gulf War. That's what I did. So here's the Persian Gulf War, but we can fast forward and try to put that into play out here. Give me a second. Now I got to get all the way to the 90s. So I might have to do that when we come back from the break. But look, I think this is important to understand. It's really important to understand because at this stage here, what I think is important is that, I was ready to just simply discount the tool bag and throw it out and say, maybe in this type of market, the tool bag isn't going to help us identify a bottom. And that's not the case. And you're seeing that right now when you take a look at the Persian Gulf War and the bottoms that it made and the counter trend rallies that it had and the optimistic outcomes, such as Operation Desert Storm, such as 100,000 troops arriving in Kuwait. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow is off 1775, S&P down 191, NASDAQ is off 6.5%, 513 points to the downside out here. So to end the show in this next couple of minutes out here, let's see, who's writing in? The Tiger's Den, starting to wonder, where is the dip to buy? Yeah, I think, Maria, it's going to have to be taken one step at a time. And the one step at a time is going to be, we're going to have to see short-term time frame charts and see key levels of resistance fail. So far, that has not occurred, not even close, not even during that rip to the upside. All that did was just showed us and just simply confirm where resistance was, which we already knew. And inside the ES Mini, that's at that 26.15 and a 26.47 level. Now, price has pulled back to test support, folks. So there could be there still could be some upside potential as long as price holds this 26.43-ish here where it's trading right now. But the level of confidence that I don't have any level of confidence here. And instead, we just have to let the market be able to identify support and resistance. And so I don't think that there's any dip to buy, because there's going to be several dips, right? So it's going to start in the short term, or should start in the short term time frame, and we should start seeing higher highs and higher lows out there. And that's really the best that I've got. I don't know what else that I can share with you at this moment. I wish I could impart some real wisdom. I think the real wisdom is, am I nuts? Or should we look at this? What we're in right now is a world war. Isn't this a war against an invisible army? And if it is a war, here you can take a look at Iraq forces when they attacked Kuwait, exactly where the Dow was trading. The first sign of any potential little bounce took place after the reserve forces were called to active duty. This did get to wave number 7. That's letter G in a Rhodes Momentum Indicator when it did bottom back on October 13th, 1990. And then within about a couple of weeks, we saw 100,000 troops arrived, and that really cemented the bottom. That was the first positive, optimistic event, I believe, it took place back then. So, folks, stay tuned. 2 great hours left. I'll look forward to seeing you tomorrow on Fantastic Friday. Take care, folks.
Since 1984, Basil